And I know times like this, you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. Today is Sunday, the 15th of October 2023. I'll be doing the weekly market review. So let's get started. Starting with the DXY, we have the weekly chart. As you can see, last week I was looking for price to work inside this weekly fair value gap, and if it wants to reach to this small inefficiency. And we in fact seen that price has shown some reaction at the weekly consequent encroachment, and then it walked inside the weekly fair value gap, and it was very close from reaching to this fair value gap right there. So now next I'm aiming for price to take out this high and to reach to the week consequent encroachment. I would like to see the weekly consequent encroachment of this wick to act as resistance to act as support once we trade above it. Going to the daily chart, as you can see, we have reached to the sell side liquidity. I have outlined this level last week and I was calling it for price to be reaching to it. And we in fact seen price reach to it this week. And we've seen some reaction from there. We didn't really reach to the weekly fair value gap, which is listed from the high time frame to the daily time frame, but we've seen some reaction to the upside. So now I'm aiming for this buy side liquidity, which is an internal range liquidity, and this extended range liquidity, which is also a buy side liquidity. And then from there, we might overshoot, and if we were very animated to the upside, we might reach to the weak consequent encroachment. So that's pretty much it for DXY. Going to the ES, we're viewing the weekly chart. As you can see, last week we walked inside the weekly fair value gap, as I've told you, and I've told you that it's not really likely to be seeing price to draw towards this low immediately. So it has to retrace and to engineer more liquidity into the marketplace by retracing and walking inside the weekly fair value gap, and we've seen that. So now what's my take on this market for the future? So I would love to see price trades below the weekly fair value gap and treat it, and it's gonna be becoming a weekly inversion fair value gap, and also trade below the weekly consequent encroachment, treating both of these levels and influential levels as resistance that's gonna be trading and sending price lower to take out this low, which overlaps with the weak consequent encroachment of this discount wick. I also wanted to see the consequent encroachment of this premium wick to act as resistance, which is also uh, in proximity to the weekly fair value, to the weekly inversion fair value gap, and to the weekly fair value gap low. So now I want to see the consequent encroachment of the premium wick to act as a resistance, and price just trades lower towards the sell side liquidity. That's what I'm favoring. Going to the daily chart, as you can see, we've swept the buy side liquidity that I've called for on ES. You can go back to my to the last weekly review when we closed here on this candle. I've called it out that I want to see price to trades up towards this buy side liquidity. And on Monday, we've seen that happen here. And then later of the week, Tuesday, Wednesday, Thursday, we walked inside the weekly fair value gap, walked inside this fair value gap that I also called in the last weekly review. I also called that this specific fair value gap, I want to see price to walk inside of it. And I didn't want to add it to make the chart cleaner. And we in fact seen price trades and walk inside the this daily fair value gap, and then it's now backing down. So now um I'm expecting some kind of consolidation here, and we might pump above this high one more time before we go lower. What I'm favoring here is the sell side liquidity. These two relative equal lows, this is what I'm favoring. This is my draw liquidity. So that's pretty much it for ES. Going to the NQ, here reviewing the weekly chart of the continuous contract. As you can see, last week we worked inside the weekly fair value gap. As I've told you, we have the fair value gap consequent encroachment. There was a bit of a coloring outside the lines, reaching to the monthly breaker low, and then we repelled away from it and we closed here. So now what I'm favoring for the upcoming trading is we reach to the weak consequent encroachment and to the sell side liquidity, which is inside the weekly fair value gap. So I'm expecting price to trade to the weak consequent encroachment and work inside the sell side liquidity and inside this space, which is the weekly fair value gap. We have the high, low, consequent encroachment, and the quadrants. Going to the daily chart, as you can see how price has rallied up higher, worked inside the weekly fair value gap, a bit of a coloring. Why? It has reached to the inversion fair value gap. The bodies were respecting the monthly breaker low. You can go to your monthly chart and you can see there's a breaker. I'm not going to be viewing it here, just an assignment for you so you can go and look it up yourself. But it's respected the monthly breaker low and then we repelled down. I'm expecting now price to trade lower towards these equal lows and work inside the weekly fair value gap. That's what I'm favoring. So that's pretty much it for NQ. I also want to add one more point. I could be wrong. I could be wrong. Many people now are, especially ES, if you can see, like we created the low, high, lower low, higher high. So many people are going to be viewing this up close candle here as a bullish breaker, especially because we swept the low and we rallied up higher. So at this moment, people have accumulated long positions. For me, my higher time frame is in more importance of the daily or the lower time frame. So the weekly time frame is showing me that the institutional order flow is still bearish. So why would I try to pick the bottom, or why would I pick? Why would I try to pick the top? Um, Continuously trading with the higher time frame in institutional order flow. So the order flow here on the weekly chart or the weekly time frame is bearish on most of the indices. So this means that every rally is suspect. We're going to be rallying up just to the premium BD arrays so we can then go further to the discount arrays and sway and tank through them. So that's how I look at price. And right there, this could be just a retracement to work inside the fair value gap. So this is how you trade turtle soaps. Some people may don't know, like they think turtle soaps are out of this world. It's just trading the higher time frame on the lower time frame. Having the higher time frame premise on the lower time frame and trading that. So you're gonna be fading most of the retail patterns that's gonna be happening on the lower time frame because you have the higher time frame on your side. So that's a point I thought I would add so people can go and play around with that. Anyway, so that's pretty much it for NQ. Going to the Dow, reviewing the weekly chart, the continuous contract. As you can see, price has touched and we've seen some reaction of the wick consequent encroachment and we worked inside the weekly fair value gap. So now I'm expecting price to either consolidate because we're it's just showing me the signature that it wants to consolidate. Like it's working both sides without showing one-sidedness. So it's gonna be either consolidating or it's gonna bump down to this low. And so it was really animated towards this constant encroachment and the sell side liquidity right there. These are the levels representative of these levels. So that's what it for the weekly. Going to the daily, you can see how price took the buy side liquidity. These are all levels that I've called on the last weekly review, and we've seen price reaching to them perfectly. Perfectly. We didn't see any deviation from what I've said. I didn't say we're gonna be seeing lower prices. No. You can go to your charts and you can go to your to the last weekly review and you can check it up by yourself. I've called it out that we're gonna be seeing higher prices for a small short period of time to accumulate more orders above marketplace, which will permit and facilitate orders and liquidity that's gonna be sending price lower further to the draw liquidity, which is the sell side liquidity. So my higher time frame premise is bearish, but on the lower time frame, the daily, you can expect some kind of retracements that are going to be engineering more liquidity. So why? Because once we break a high, people are gonna be, or breakout artists, let me put it that way, are gonna be trading long here, having their stop loss, and we're gonna be run on them to engineer both sides of the marketplace. So now people who were short from this high and rode this down all the way in here, they have their stop loss above this high. We run up higher. All this time, the PNL is decreasing. So it was in profit all this time. And then right there, it got in loss. So many of the people are gonna be panicking once their position is now in loss after they've seen all of this profit on many days, and then it broke lower after many orders have been accumulated there. Many people have exited their positions at break even or at small loss because they were panicking. They don't have the mindset to hold positions, and then it broke lower. So this is gonna be also trapping the breakout assets to go long, to have their stop loss below this low, because they think now we broke this high, we're gonna continue going higher. We're gonna treat this high later on as support, and we're gonna further go higher to this high. And they don't know what the weekly time frame is showing them, and they're trying to pick the top and the bottom all the time. So this is how the market will engineer liquidity after it takes out this low. So now no party of retails are going to be involved into this move because it has swept the buy side and it's now trading to take out this sell side. So I'm favoring a run towards the weak consequent encouragement, and to the sell side liquidity here we have relative equal lows. That's pretty much it for Dow. Going to the Euro USD, also known as the fiber. Here we're viewing the weekly chart. As you can see, last week we worked inside the weekly fair value gap, as I've told you, and we overshot to the bearish breaker. We've seen some reaction there. Price has resisted. Price from this price level has resisted price from digging further deeper inside of it, and we repelled away. We closed approximately at the weekly consequent encouragement. So now for the next week or in the future, I'm expecting price to trade towards this sell side liquidity. And later on, this is my deeper draw liquidity, which is this sell side liquidity right there, this low, which comes at this level. So these are my weekly outlooks. Going to the daily chart, as you can see how we swept the buy side liquidity. Many of the things that I've shared last week have came into fruition this week. So it's within 1 week, price has reached to the draw liquidity, short-term draw liquidity on many of the markets that I've shared. ES, Dow, DXY, Euro, and I'm gonna see pound later on. All of these markets have traded and reached to the short-term draw liquidity that I've shared. That doesn't mean that you need to take signals from me. It just means that um I'm calling it out every week. I'm calling the markets every week on my YouTube channel. And it's coming into fruition like I'm painting the candles. Anyway, so we worked inside the buy side liquidity. As you can see, we pumped into it and we walked inside the weekly fair value gap. There was a bit of coloring outside the lines. You can see the candles were a bit higher than the weekly fair value gap, but it's fine. And then we traded lower at the weekly consequent. We closed at the weekly consequent encouragement. So now I'm expecting price to dig lower, take this low, reach to the sell side liquidity. So that's pretty much it for the euro. Going to the pound USD, also known as the cable. Here we're viewing the weekly chart. As you can see, last week we were very close from the weekly consequent encouragement. We run up higher to trade and walk inside the fair value gap, weekly fair value gap. Took out these highs. We're gonna be viewing it now on the daily chart. But anyway, we worked inside the fair value gap, weekly fair value gap, and we closed inside the weekly fair value gap, this weekly fair value gap. So now I'm expecting price to trade below the weekly fair value gap, which is also in approximate with the weekly consequent quotient of this discount wick, treat them as resistance and then run lower to the sell side liquidity and to the consequent quotient. And if we were really animated to the downside, we might reach to the sell side liquidity right there. So that's pretty much it for the weekly. Going to the daily, as you can see, we worked inside the fair value gap. We took the buy side liquidity. As you can see, we have a buy side liquidity here also, and this buy side liquidity. We traded through them, we swept them, and when we repelled lower inside the weekly fair value gap, as I've mentioned on the weekly chart, I want to see price trades and close below the weekly fair value gap and the weekly consequent encroachment to qualify them as an inversion fair value gap, which we're going to be treated as resistance once price revisit them, and which going to be sending price lower to the sell side liquidity, and also to these drawn liquidity that I've shared on the weekly chart. So I think that's pretty much it for this weekly outlook. It wasn't long. I just showed up to show you what has price done this week and how it has reached to the levels I've called out beforehand. I also want to address one point that when your higher time frame weekly is not aligning with the daily or the lower time frame, it's better for you to reduce your risk and to manage your risk properly. Because when the two higher time frames or the higher time frame with the lower time frame are not aligning, this means that you're trading inside the low probability conditions, and you want to see price on the lower time frame to get in concert with the higher time frame. What do I mean by that? On the ES, you can see the weekly chart, it's bearish. We created a high, low, high, low, low. Like this is a bearish institution order flow. We're creating a fair value gap every time price retrace, bearish order block, fair value gap. Now it's gonna be resuming going lower. This is a bearish institutional order flow on the weekly chart. Going to the daily chart, you can see that it's kind of forming the turning point. I'm not calling that it's gonna be the bottom. I'm not gonna be calling that. But what I'm saying here is that you could be arguing that this could be a bullish scenario. What do I mean? When you cannot decide one-sidedness, that's not low probability. For here, some and many of the people who are trading can actually expect two scenarios. Either it's going to be from here run up higher, or it's going to be reaching lower to this sell liquidity based on the higher time frame weekly chart. So it's stuck in between 2 points. It's not showing us the one-sidedness. So I cannot decide one-sidedness for the daily chart, but I can decide a one-sidedness for the weekly chart. The weekly chart tells me that we're going to be seeing lower prices based on what I've seen here, the bearish institution order flow. But on the daily chart, it's not showing me the one-sidedness that it wants to trade lower. We've seen price trades lower all the day, all the way down here, and then it has retraced, breaking out this high and trading inside the weekly prevailing gap. I'm not saying that I'm going to be trapped into going long nor going short. I've told you I need more intel from price action to decide what I'm going to be doing in the market. So I think that's pretty much it for this weekly review. I thought I would add this point for you to identify when is your best probability for you to put on the max risk that you can be putting. Anyway, that was pretty much it. I hope you gleaned something useful and important from this weekly review. And until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.